Good morning. For Traders Exclusive, this is George Tkaczuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. What I'd like to do is talk about the equity markets this morning, and the equity markets continue to push on higher. And it's pretty good. All the indices got above their 200-day moving averages, so basically we have the S&P above the 2,800 level. Everyone viewed that as a possible point of resistance, and we still might fall back beyond that, but we're above that, and that's a good sign. Similarly, on the NASDAQ, we're above the 7,500 level. So as long as we're staying above that, that's good, and Dow Jones is above the 2,600 level. Excuse me, 26,000 level. So that's really good, meaning the indices are pushing forward. And the question is, what's driving this? Well, there's a lot of money still on the sidelines. That money still hasn't come into the market. So if you're sitting in positions that are acting well, continue to sit there, because all this money possibly chasing market coming back in, sort of fear of missing out may push this higher. And we're starting to see this kind of really risk-on type of thing. Last Friday, we saw a lot of gap ups on earnings, and I want to talk about some of those large gap ups. We saw a stock like the Trade Desk, TTD, gap up and move 31%. And it's holding that level this morning. That's a really important thing. I talked about that 2 weeks ago about what's the reaction after earnings 1 or 2 days after that gap up or gap down. So that's something you might want to take a look at. As long as it holds that closing level of Friday, that stock's good to go. Now, these aren't trade recommendations. You should also consult your financial advisor, but these are the kind of stocks you want to look at in an aggressive market that's going higher. Similar to a stock like Universal Display, symbol OLED, gapped up 23%. It's holding that level this morning. Acacia Communications, symbol ACIA, gapped up about 17%, easily holding that level and moving higher. In fact, we did take a position earlier on Friday, and this morning we're adding to it as long as it's holding that level. It was 55.20 or 55.40 and change. You can give yourself some room there, 2-3% below that closing level, Friday's level. It doesn't hold that. The trade's not going to work, but the trade may go higher. We're in that kind of environment. Roku, symbol ROKU, gapped up about 25% and continues to hold those levels this morning. And stock like Anaplan's gapping up today on earnings 13%. We'll see how that holds tomorrow. So again, these aren't trade recommendations, but this tells you the state of the market. We have the indices above their 200-day moving averages. It's very positive, and we see a lot of aggressive growth stocks gapping up, having huge moves, and holding those levels. And why that's important is institutions drive the price of everything. And when you see these big moves, the big question is, are they selling into it or are they buying it? Well, the concept is if it holds that level after the gap up and it holds it for consecutive days afterwards, that means they were buying it. They didn't use this as a liquidity event to sell into, because if they sold into it, we would see those prices drop and unable to hold those levels. Now, if that does happen, if you just start seeing those gaps just start to lose, that tells you risk is off. It was a liquidity event. Institutions are selling into it. But for now, as of today, it looks like they're buying into that. So, as always, let price and volume be your guide. Watch those gaps, consult your financial advisor, and have a great trading week. This is George Tkaczuk, RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great trading week.